Hey guys, welcome back to our YouTube channel. So in today's episode, I'm going to be teaching you guys a powerful tool that you're going to be using to scale up your trading game forever, and it goes by the name Fibonacci Retracement. Alright, so before we dive right into the video, if you are new joining this channel, ensure you click the subscription button, turn on your notification, and also like and share this video so that it will encourage us to do more content like this that's going to change your trading game forever. Alright, so let's dive right into the video. See you. Alright, so we're going to dive right into the video. So we're going to be teaching you guys the Fibonacci retracement tool, using it effectively. One thing you need to know is that your Fibonacci retracement tool is used when you must have analyzed your market. Probably you're using price action strategy. Okay, so you don't just get to apply it on the charts like that. You need to back it up with your price action for it to work effectively. All right, either is an uptrend market or a downtrend market, not a ranging market. So it's a trading market that it works effectively. Okay, so we are going to go into it ASAP. So let me show you. So I'm going to get the Fibonacci tool from the left hand side of your trading view. So let's look at this. When market created an impulse move like this, and you're wondering where is the market going to retrace from, as the name implies, Fibonacci retracement. So you know retracements are temporal pullback before the market continues to trend. You know that already. All right, so you met market at this point and you're like, don't know where the market is going to retrace from after it has created an impulse move from here. As you can see, market has been creating higher highs, higher lows up to this point. So where do you draw your Fibonacci tool from? Once you've gotten your Fibonacci tool, you draw from this place where the higher low started from up to where the impulse move region, which is here. As you can see, I believe we'll say that right there. Okay, so market got here and we wonder where's the market going to retrace from. Now take note of three levels in the Fibonacci retracement tool that works effectively. The first one is the 0.382, the second one is 0.5, third one is 0.618. So these three zones are very, very important. I know there are videos that will tell you that it is just 0.5, 0.61. Okay, so no, it is not only that. So based on my experience in trading the financial market, I got to realize that 0.382 is also part of the retracement zones. All right, so here are the lines right here. Let's look at where the market pulled back to. Now market pulled back to the region of 0.5, as you can see. Now what is the final thing you use to back up your retracement? That okay, the retracement tool is done, that's the retracement is already done, is your candlestick. If you're in a buying market, that's an uptrend market, when you have market approach in your Fibonacci retracement tool zone, what you look out for is bullish candlesticks. All right, two or more bullish candlesticks. Once you have that confirmation, then you can buy the trade. So let's zoom out. You're going to see bullish candle. All right, so we have the first bullish and the second one. Like I said, two or more candles. Right, you also have a bullish right here, but it's a small red one. Right, but if you look at the zones very well as a professional trader, you'll find out that this is a W when you go to a lower time frame. And you know a W, which is a double bottom, represents a reversal to the upside. Okay, so when you have that backed up, you're good to go. You buy your market. Watch how the market blew up. Why did it blow up? Because you are not the only one looking at the market. All right, they understand the tool, they understand the region where the retracement is done and know where to join the trend. And that's why the market blew up to this point, as you can see. So that is basically how you actually use. I'm going to take another example for the downtrend so we can actually see these things for ourselves. You got to take note of this now. When you're using your trend line strategy, for your Fibonacci retracement tool to work well, your trend line must have created, you apply your Fibonacci tools where you have two or more touches for your trend lines. All right, so as we have here, we have the first touch, second touch, third touch, fourth touch. So we're going to be using the second and third for our illustration. All right, so now market created an impulse move down to this place, thereby creating another lower low, right? Let's just say market is currently at this place. Hold on. So I'm going to take out this so that we don't get confused. All right. So you met market at this place and you're wondering, where is market going to retrace from? When is the retracement going to be done? Instead of looking like asking yourself that kind of question, you just get to bring out your retracement tool after you must have analyzed your market. Then you draw from where the market started creating an impulse move to the downside. So we draw from here down. Let me do that again. All right. So as you can see, where did the market actually retrace to? 0.5 zone. Do we see that? The moment it arrived at this zone, watch the new impulse move that was created. Massive sellers, because like I said, you're not the only one looking at the market, looking for opportunities to sell. So they are seeing this. It is traders that move the market. If you have more buyers, market will buy. Or you have more sellers, sellers will be selling. And so we already have a trend for sellers it shows that the sellers are taking charge of the market. So this is a temporal buy. Buyers will know job bellyful. So then you have your sell. Look at this crazy impulse move down. A lot of sellers created their order right there. The market created a new impulse move and a new lower low. You can see that. Watch out for the zones. Like I said, your 0.618, 0.5 zone, and as well as your 0.382 zone. So these are very, very important. When you have markets arrive at those zones, you take note of that. Now, your Fibonacci tool can be used as a form of take profit, it's a form of take profit. Now, take note of this. You can use your zero level right here as your first take profit if you are selling, and if you're buying, you can use this high one right here for your first take profit. Then it's up to you to want to hold to the other level, your choice. But I'm just showing you where you can map out your first take profit using your Fibonacci tools. There are several ways of using your tools, but I just expose you guys to this particular one that's going to help you in your trade. The goal is to make more profit and not for you to give your money to the markets, not the forex market making money off of you. So for you to make profitable withdrawals. I have made so much money in the financial market and I've been able to empower a lot of people across the world, thousands of people, and they're doing very, very well in the market. I'm so proud of them. Right, so I'm giving you guys a free content. This content is supposed to be monetized, okay, but I just want to give it to you guys because I want you guys to be able to trade the market the right way. All right, so that is the explanation. So if you're just joining in, all right, ensure you turn on your subscription button, turn on your notification, all right, so that you don't miss any video or any content we're going to be dropping on our YouTube channel, because there's several educational videos that are going to be coming your way, so you don't want to miss it at all. If you want to be profitable, you want to make more money in the markets, you turn on your notification, subscribe to this channel, and don't forget to like and share. It doesn't cost much to promote our videos, to encourage us to make more content like this. Like and share this video, turn on your notification, and click the subscription button. All right, so it doesn't cost much to do that, so we can create more profitable and educational content like this. All right, so that is the end of the episode for today. So look out for the next episode to come. All right, do have a lovely day. Thank you very much. Bye.